What's going on, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be talking about the top couple of stocks and ETFs that I'm watching and looking to trade in December of 2018. So for those of you guys that are new to my channel, my name is Stas and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that want to learn more about that, feel free to drop a like, leave a comment, and subscribe, and follow me on Instagram as well as on Twitter, and join our Discord group chat as well as our Facebook group. All of those are linked down below in the description box. And if you guys want to be in contact with me throughout the entire trading day and a bunch of other stock traders and investors, I believe we have about like 265 people now, join that Discord group chat, guys. We're talking throughout the entire day about trading, investing, stocks, strategies, stock news, and all of the different stuff that has to deal with this YouTube channel. So again, join all those links. They're down below in the description box. And if you guys don't want to, that's cool as well. But, let's get started right now with the topic of today's video. So let's get a sense of what the overall market is looking like. I do this in every single video. I do a technical analysis of the Dow Jones, the S&P 500, and the Nasdaq, and we just try to get a sense of the technicals of the overall stock market before we do hop into, individual stock analysis. So let's do that right now, and let's talk about the Dow Jones very quickly. So for those of you guys that have been following the stock market, over the past couple of months, you've realized that, we peaked out in terms of the Dow Jones at about $27,000. We had a very bloody October. We sold off very heavily. I believe it was about 10%, right, from $27,000 all the way down to about the mid $24,000 range. 10% drop in the Dow Jones, and you can see that was pretty much all of October, right? It ended off at about October 31st, started the sell-off at about, October 3rd, October 2nd, pretty much the entire month, right? And then we saw a resurgence in the overall Dow Jones from about the mid-24,000s all the way up to about, $26,250. And then we notice, guys, another big sell-off from that point here all the way to where we are trading right now, which is at this support level at about 24,500. And we noticed that we did break down below this support level, which is not a very good sign, and I'm going to get into that right now. So what do we notice in terms of the overall pattern in the Dow Jones, right? We notice here that obviously we topped off at 27,000, like I said, and the next high, guys, is at about 26,250. And what do we notice between these two highs? What do we notice is that this is a lower high from the previous high, meaning that this could be the start of a downwards trending pattern. And also, guys, what do we notice again is that this low here at about 24,200, the one that we're currently at, is starting to become a lower low from the previous low at about $24,500. And this is why I was talking about how the support that the Dow Jones was at on Thursday, which was Wednesday, because Thursday the market was closed because of Thanksgiving, but the support we were at on Wednesday at $24,500 was very, very important, because if we were to, able to keep above here and, start to push back up, that means that this would not be a lower low, meaning the downtrending pattern of lower lows, lower highs will not be continuing, right? Which is something that we want to see happen for the overall stock market to correct itself. We don't want to see, lower low patterns forming in terms of the overall markets, because we're going to be getting deeper and deeper into bearish territory if that does happen. But now that we notice that, the overall Dow has broken below this support, and in my personal opinion, guys, there's going to be more and more downside to come, we're just getting deeper and deeper into that correction territory and heading even deeper into a bear market. Because for those of you guys that don't know, if an index falls about 10 to 15% from its peak in any given time, that's considered a correction, right? But anything over 20% drop, anything over a 17 to 20% drop, let's say it falls 25% from its peak, right? That is considered bear market. That's considered an index, or the stock market in general is in a bear market. So we're not quite there yet, but with the pattern of this Dow Jones, guys, we're slowly looking like we're getting there. So let's take a look at the S&P, very, very similar to the Dow Jones, guys. This one, it topped off at this, support, or not the support, the resistance at about 28.20 here. We had trouble getting above it here, right, guys, from this bloody October, from the peak at 29.50 all the way down to about 26.30. This sold off about what? Very similar to the Dow, right? About 10%. So this is still technically in correction territory. Then we were able to pop up back here, had trouble getting past the same resistance at about 28.20, and now we're trading right at that support at about $2,630. So on Monday, guys, it's going to be very important, and this whole entire week, honestly, very important to see where this is going to end up going. Are we going to be trading horizontally here in terms of the S&P 500, right? Because right now we are holding that support, and we did pretty much get rejected right at that resistance. So we could potentially trade horizontally here, or are we going to push down here, make a lower low, and continue this correction pattern and head deeper into a bear market in terms of the S&P 500? So keep an eye on these technicals, guys. Very, very important to understand what's going on in the indexes, to then take that and see what's going on in the individual stocks that we talk about, the ones that you guys do your technical analysis on, and all that great stuff. So now the Nasdaq, guys, this one's got hit way harder than the S&P and the Dow, and this is mostly because of Apple stock getting killed, right? We noticed Apple was at $233 per share, and now if you guys can see right here, guys, we're trading at $172 per share, and obviously, guys, Apple has a very big weight on the Nasdaq, and this has brought the Nasdaq down 15% from its peak. So this one is in deeper correction territory than the Dow and the S&P 500. And we noticed that this one's in free fall territory right now. There's no really supports, we can't really identify any supports in terms of the Nasdaq, because we did break below this support right here that we were talking about a couple of days ago at about $6,745. And obviously, guys, since then, Apple and the whole tech, all the tech stocks have been selling off heavily, which, has pushed down the Nasdaq all the way down to $6,530. So, guys, in terms of the overall markets, the Dow Jones and the S&P 500, they're in correction territory right now, with the Nasdaq heading closer and closer to a bear market, being down 15% from the peak that we saw, late September, right? Late September here, 7,700 all the way down to 6,500. That's a 15% drop. So in terms of the overall markets, guys, not looking too great on an overall, technical basis. And a bunch of analysts out there, Morgan Stanley came out saying that the worst has yet to come, right? We're seeing a bunch of analysts on CNBC, all these different, analyst websites on the internet saying that the worst has yet to come, right? So we are going to be seeing potentially a lot more selling in terms of the overall stock market in the coming months. And this is something that I'm actually pretty excited about, because I know I'm a swing trader, right? But I'm also a very avid long-term investor in very strong companies. So I do want to see, a better buying opportunity for these large companies that I am invested in. And I'm very, looking forward to adding more money into stocks as they do get lower and lower and lower in price. This is something that I'm not scared of, because I'm in the stock market for the long term, because I believe in the stock market, guys. The stock market has been yielding 8 to 12% in the S&P 500. If we're looking back when the stock market first came about, right? Years and years and years now, the market has been continuously growing. So why would anyone be scared that now we're in the strongest, economy that we've been in years? Why would anyone be scared of a dip in the stock market, right? This is something that's pretty foolish. If you're selling out, you're scared. I mean, guys, this happens all the time. This is something healthy for the stock market, right? We see sell-offs all the time. We see corrections all the time. The recessions happen every 5 to 10 years. This is something that is just part of the economic cycle, right? So don't worry if you're a long-term investor. Do not worry about this. I personally wouldn't worry about it at all. But, let's just talk about a couple of stocks and ETFs now that I'm watching for this upcoming week and, for the rest of the month in December of 2018. So like we've been talking about this whole video, right, the overall markets are very, very volatile. So in terms of swing trading large cap stocks, guys, this is something that I'm not really looking to do for this upcoming month because, again, all these stocks are taking hits, right? Apple's looking terrible in terms of technicals, right? Netflix is looking very bad. Google's looking terrible, right? Amazon's looking very bad. These are not stocks that I'm going to be wanting to swing trade because when we do swing trades, guys, we want to focus on uptrending stocks and focus on technical analysis, right? But when we're looking at these stocks, their technicals are looking terrible. Why would you want to swing trade something that's on a downtrend, that's, getting rejected by the EMA, SMA, all these different indicators that we use? So in turn, guys, I'm going to be focusing on market ETFs and a bunch of different inverse ETFs for this month of December, as long as the market itself is very volatile. Because if the market's volatile, you know what you guys can be trading? You can be trading these market ETFs like TVIX, UVXY, TQQQ, SQQQ, and QQQ, which all are extremely volatile, whether the market's going up in price and whether the market is going down in price. Let me get a little bit deeper into this. So TVIX, guys, is an ETF that I've personally been trading a bunch over the past month and a half that goes up in price as the overall markets are selling off. So if you guys think the markets are going to continue to sell off heading into the new year 2019, this could be a very good option for you. Like we notice here, guys, right? In the beginning of October, this was 25 bucks and it peaked off at about $60 towards the end of October. We took that big pullback here, as the markets were continuing to push back up. They were slowly recovering. And then, as we saw this sell-off over the past 2 weeks, this popped from $34 all the way back to $52. So you guys see the volatility in this, and it's been very nice in terms of trading due to the overall, massive swings that the Dow, the S&P, the Nasdaq have been having, right? So keep an eye on TVIX for sure for this upcoming month. And another one that trades based upon the overall market is UVXY, and this one's going up as well, just like TVIX when the overall markets are selling off. So let's say the Dow Jones is going down, the S&P is going down, the Nasdaq is going down in price. You better expect this one to be going up in price, and that's exactly what's been going on for UVXY. And another one that's going up is SQQQ. This is another ProShares Ultra Pro Short Q ETF, and this is a great option as well when the overall markets are selling off. So just guys, please keep an eye on this and do your own research again when you're trading stocks, investing in stocks. Do not buy or sell based off of my opinion, because that's not how you're going to become a self-sufficient trader and investor over time. So now let's talk about some ETFs that potentially go up if the overall markets are going up, and they do go up. They don't potentially go up. They do go up when the overall markets are pushing up in price. So if you do think that this sell-off that we've been seeing in the market is going to end, this week, next week, in a couple of weeks, TQQQ as well as QQQQ could be very good plays for you, because these do go up when the overall markets are going up in price. We notice here, in May, pretty much, right? Early May, this is $161, and it popped up all the way to about $190 at its peak before selling off all the way to $159 right now due to the big bloody October and November that we've been having in the stock market, right? And TQQQ, same thing here, guys, right? Big sell-off here, but this does go up overall when the markets are going up in price. So keep an eye on these market ETFs, guys. These are going to be very, very, very good plays because, the markets, again, I've been saying this whole video, they've been ridiculously volatile. So keep an eye on these. They'll help you out a lot if you're an intraday trader, if you wanted to swing trade for a couple of days, right? They'll be very, very good plays for you. And another couple of stocks that I personally think are interesting and are at interesting spots right now are the cannabis stocks, right? Let's take a look at CGC, guys. We notice here, let me draw some trends for you guys, right? We notice here that this is at a spot right now where it was able to bounce at before. This was a couple of weeks ago. This was, when was this, guys? 10:30. So about 3-4 weeks ago, Canopy Growth Company was at about $31 per share from the $60 price point that it was at. So, overall, this opened up 46% margin for us looking to trade these weed stocks. And we saw a big push here from 32 back up to about $46. And now we saw another push back down to about the $31 range, which is near that price point. And 3 weeks ago, from 3-4 weeks ago, where it was able to bounce at before. And what do we notice from this trend line that I was able to draw here on Canopy Growth Company? We noticed that, this stock has been able to hold above the previous resistance points that we saw from a couple of months back, being here at about $32, $31. We popped up at about $36. And what do we know about previous resistance points, right? When previous resistance points are broken above, which happened here, they become new support levels. And once we noticed that it bounced here and popped up to $45, that just validated this as a new support level. And now that we're here again, I want to see potentially if we're able to pop up again, potentially back up to this 180 SMA, which has been a resistance. Oh, sorry about that. Which has been a resistance in the past. So keep an eye on Canopy Growth, guys. This could be a good play from about $35 up to about $42-ish, which would put it right at that 180 SMA. And that would give it about a 20% margin of profit. So Canopy Growth looking very, very interesting, guys, at a very interesting price level right now. Cron, these are very similar plays as well, right? We noticed the previous resistance on Cron, or a resistance point a couple of months ago on Cron, was at about $8, right? We noticed it had trouble getting above 8 here, trouble getting above 8 here, trouble getting above 8 here, but when we popped up above 8 here, that made 8 the new support level rather than a resistance point, and that proved to be, right, due to this bouncing at $8 here instead of breaking below it, right? We noticed it bounced here, it held above here at about $9. We broke a little bit below it here at about $6.44, but ultimately we were able to pop back up to $10, and now we're holding above $8 very, very nicely in terms of Cron. So what to keep an eye on, guys, for this upcoming month and this upcoming week in terms of this stock here is to see whether or not it's going to break above this 180 SMA, which has been a resistance point in the past. Because, guys, this consolidation here, this has been about a week and a half of consolidation above $8. So this is looking very, very good. Now, if we're able to see a move past $9, guys, we could potentially see a move from $9 back up to $10, giving this one a nice 10% potential for profit. So overall, guys, keep an eye on these market ETFs and keep an eye on these weed stocks definitely for December of 2018. So some other ETFs that I'm keeping my eye on for this upcoming month are these right here. And for those of you guys that have been following my channel for a while now, you know that I trade in and out of the same ETFs all the time, right? This is not something new here for those of you long-term viewers, right? I've been trading Drip and Gush for a while now. I've been trading JNUG and JDST for a while now, and I've especially been trading UGAZ and DGAZ for a while now. So let's talk about what I personally think in terms of these ETFs right here. And let's just talk about UGAZ and DGAZ very quickly, guys, because these have been at the talk of the stock market trading community for a couple of weeks now, especially the community that I run, in Discord, on here, in the comment section, on Facebook, all these different platforms that, I'm a part of and the whole community here is a part of, right? So let's just talk about the natural gas-based ETFs very quickly right now. And I personally believe that natural gas does have a shot of hitting $5 a share based off of these, technicals that we're going to see right now. So let's just take a look very quickly at these technicals in terms of natural gas, and then, I'm going to end off this video today. So what do we notice here in terms of this natural gas commodity, right? We popped up to $4.92 right here. We sold off at $3.90, right? We called this one out here on this bounce on the 50 SMA. A couple of videos back, we were able to make a solid, I believe it was like 8 to 10% on UGAZ the next day here after this call out. We popped up here back up to about 480. Right, we took a sell-off here to about 440, popped up again at this resistance point at about $4.80. We sold off strong to about 420, but we've been holding this pattern now for the past couple of days. Since about November 21st up until now, we've been holding this pattern here from about 420 to 440. And what do we notice here, guys? Let me just quickly clear this drawing set for you all to make this a little bit more clear. So we notice that this is a higher low from the previous low at 390. So if this is able to hold, guys, right, if this is able to hold this trend that we're trading in right now for natural gas, this could be the next, or this could be the bottoming out point before pushing up to another higher high, which could potentially be $5. So judging off of a technical basis, guys, I do believe that this is a very bullish pattern right now for natural gas due to the higher low action that we're seeing, due to the strong consolidation that we've been seeing over the past couple of days. And, you know, personally, guys, I do believe that we could potentially hit $5 in terms of natural gas, right? And let's just take a look at how this is looking for you guys, right? Very similar, right? We topped off at 260, sold off to 110, popped up here, saw resistance at 190, sold off, but we've been holding around here for about 2-3 trading days right now, guys, right? From at about $150. So if we're drawing this out here, this is a higher low pattern that's slowly starting to form. And for those of you guys that don't know, DGAS is undergoing a reverse stock split right now. And I've made a video on that, guys, about the whole reverse stock split. It's going into effect tomorrow on Monday on DGAS's closing price from the 23rd, which was $2.85. So pretty much, guys, in a nutshell, what's going to happen here is that 285 is going to get multiplied by 20. The shares are going to be whatever that is, guys, 285 times 20, and whatever shares you have, whatever share amount that you have, right, whether that be 100, 200, whatever, it's going to be divided by 20, right, and then you're going to get the share price from 285 is going to be multiplied by 20, and that's what you're going to pretty much have, right? You're going to have to do some math in terms of that, and if you guys want to see that in deeper depth, go check out my previous video, a couple of videos back on the DGAS reverse stock split. So, you know, the ETFs I'm watching, guys, natural gas, DGAS, UGAS, of course, we talk about those all the time. You know, DRIP is one that I'm watching very closely, guys. This one has been doing very well over the past couple of weeks due to the big, massive stock market sell-off. This has been helping out DRIP very much, and crude oil has been getting killed, guys. Crude oil has been getting killed. It's at about $50 right now, I believe, right? And we noticed that this one is at 76 just a couple of months back. It just hit a new low, I believe, for the year. Let me just take a look very quickly for you guys, right? This, yeah, hit a new low for the year. It's been blowing through the supports, guys. It's been blowing through that. It's on a downtrending falling knife pattern right now, and that's been helping out DRIP very, very much over the past couple of weeks. So pretty much, guys, I'm not really watching too many stocks. You know, I'm watching mostly these market ETFs, these inverse ETFs, and the cannabis stocks, because the big stocks, like I've been saying this whole video, guys, they've been getting hit, right? They've been getting hit due to the overall sell-off in the markets, and I don't want to swing trade a falling knife, right? Because again, you know, the big stocks that I typically trade, like Microsoft, well, Microsoft's not looking as bad as some of these other ones like Facebook, right? Apple, right? Netflix. These patterns are looking terrible, and I wouldn't want to swing trade patterns that look like that. So I hope you guys enjoy this video. It was a little bit longer today, but if you found some value in it, feel free to drop a like, leave a comment, subscribe, and follow me on Instagram and Twitter, and join our Discord group chat as well as our Facebook group. All of those are linked down below in the description box, and let me know what you guys are looking to trade this upcoming month and this upcoming week. I would love to know. So I'll catch you guys in the next video. Have a great rest of your weekend. Peace out.